is this person really a searcher, and should they really be in this area, or did they either see the numbers and they thought, oh, these, this is going to be an easy way for me to, get to make a handful of millions, or is this this is a great deal where I can take 2 years, get a 6-figure salary, and if it doesn't work, hey, look, I'm on to the next thing, and I made 200 grand or whatever it is for the last 2 years.
Welcome to the Found and Funded podcast, a podcast for searchers by search experts where we explore the route to business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Gerald Edelman and founder of the ETA Awards. Now let's get into it.
If anybody has it out there, I will buy that right away.
And you seem quite happy. You didn't buy that business.
It's the you have to cut that part out. Okay, that may not make it on the air.
This time we have Bramley Johnson with us, legend in the international search space and part of what I affectionately call the cartel. Bramley's over a decade of experience in the search industry, working with, for, and investing in search funds all around the world. Bramley, great to have you on. It'd be great if you could perhaps start by just giving us a bit of background about yourself and how you came to this place.
Oh wow! Well, I think we prefer the term mafia as opposed to cartel, just to get that one lovingly. Gosh, I have an eclectic background, so I won't get into the sort of weeds of it, but I've been in search for about 10 years now, maybe a little bit longer. I've done just about every aspect. I even ran a search a million years ago. I've invested in search, worked with searchers from the very bit of when they were deciding whether they want to do a search all the way through to their actual search, getting on boards, working with them, selecting companies throughout that process. I also ran the International Search Fund Center for several years through ESA. And my family goes back to the original searchers back in I guess it was the late 70s, all the way up until now. So we invested also with the first searcher in Europe, Simon Webster, first searcher in Spain, Mark Bartimaeus. We've invested internationally, I think almost on every continent. It's been an interesting world to be in and watching it grow from something so small into something that's now very, very large.
Yeah, well, it's certainly someone that's worth talking to here. I mean, I'm an absolute relative newcomer compared to you and your family there. It would be good actually to get into, if we can, the history a little bit. And I think, initially the first investments done in the family were done by your father, co-investing with some other search fund royalty. It would be good to understand a little bit about that background and where the initial investment started. I think there were probably a lot in the US before search kind of made its way out of the US. Can you tell me a bit about that?
Yeah, I mean, I can give you a rough thing about the outline. I'm sure my father will butcher me in terms of the specific stories and how it worked. But I know that when my father was an entrepreneur, Bill Eagan was one of the initial investors in his company in the United States. And that's how they sort of met and began to do co-investments along with Irv Grossbeck was introduced, I believe, through Bill to my father. And based upon that, he was introduced to the model of search funds and got involved and started investing in search. And search became, I think it started a little bit organically, listening to Irv tell his story, and then sort of grew from there and has grown into this sort of really impressive asset class that has shown tremendous returns, at least certainly in the United States has become sort of a proven asset class. And I think it will prove itself internationally, whether we see the same IRRs that we see in the U.S. I think the jury is still out on that. But that's sort of the fundamentals of how he got into search. It was sort of, I think, a little bit more, I don't want to say accidental, but certainly a little more organic than it was to say, like, okay, I'm going to start investing in this area. And I think you're seeing a little bit of that same, not lack of traction, but sort of the same sort of learning curve that you get in the U.S. It was sort of the beginning back when I was even in sort of the initial search phase and talking to things like brokers and individuals like that. Most of them had no idea what a search fund was. In fact, if you called up and you had a conversation with a broker and they would say, proof of funds, where's your money? Oh, I got to run this up the flagpole. They would just hang up the phone, and that was sort of it. And now, there's brokers that are practically dedicated in the United States to just working with search funds. And so I think you're seeing that sort of lack of adoption, learning sort of elements over here being the same sort of issue. Just like I had a site visit yesterday with the credit committee was there and the seller was there, and we were talking a lot about what it's like in England, for the fact that a lot of people are still trying to come around to sort of the concept of search over here, which is interesting since it's been the first place that search came to was the UK.
Yeah, it is, and it was some time ago now, but there's been a very slow, growth, I suppose, in the UK, and I think we probably could have learned a lot from how the US had done it, and probably piggybacked off that and done it a lot more quickly. We're definitely seeing those challenges with brokers still, and sellers who don't really understand the model and don't give search as much credence when they call up and say, look, I would like to buy your business, but I need to speak to my investors first. As you say, that immediately puts people off. So, perhaps a bit can be learned from how the US evolved.
Yeah, I mean, I think so. I think I don't pretend to know the UK market extraordinarily well. I'm certainly not on the ground in the trenches here, but I think you're talking about two very different markets too. The US is a black box when it comes down to what a company looks like, and to be able to ascertain like, is this company making X or Y and EBITDA sort of elements. And so the broker world is very different. And quite honestly, in order to be a broker in the US, you really just need a real estate license, and sometimes even less than that. So anybody can show up and say that they're selling a business. But over here, my understanding is that everything is run, almost all deals are run through brokers. It's, that people, the financials are pretty transparent. People can sort of fish around and see what they want. So I think you have people that can play in sort of the SME market a lot more than say sort of PE or boutique PE would play in the United States. And so I think you see a little more of that competition. But absolutely, anytime you see you have to run up the flagpole to these ghost investors that nobody knows, everybody's alarm bells goes off and says, okay, well, show me the money kind of thing.
Yeah, that's it. Great. So you mentioned briefly there as well a couple of names, Bill Eagan, who's obviously a big name in the space, and
a legend,
and an absolute legend he is, and there's others that you have associated with through links with your father. I suppose it would be interesting to understand how much involvement you have with them, how many cap tables you're on with them. Is there still, I mentioned that at the beginning of the show, slightly tongue in cheek about the kind of the cartel, but how much co-invest goes on amongst that group of the kind of the old school, the original investors in search?
Well, I think there's always the ability, no matter where you are in the world of search, that you like to see people on the cap table. I mean, I don't know that if you really want to see the safeties and numbers, or whether or not maybe you think very similarly, you look at deals very similarly. For me, it's a mixture of all those, but it's also like knowing that in theory, maybe one of us will be on the board, so we have a little bit more understanding, or at least good foresight on how the business is progressing. But yeah, investing together is certainly something that I think started and has kept going. And I don't know whether there is sort of that real mafia, but there was so many new investors flooding in the space. And I think that goes to we may talk about it later, but the note that my father had written on for new investors to truly understand what it's like to invest in this field, because you're getting so many people just seeing these returns and saying, well, I want a bite of that apple, without fully understanding the model or the reasoning behind it. I like the model, certainly returns in the sort of, I don't know if you use the term protection, but the ability to ensure your investment is relatively secure, at least the initial investment, because of the fact that we're buying existing healthy assets that are growing. Adds a layer of God, protection is not the right word, but that's the only one I'm coming up with, to the entire structure. But I think on top of that, it's just the fact that you like to see individuals that are people that you've invested with before, that you can connect with. And so when you're getting all these new investors rushing into the space, you're getting a lot of individuals that you end up on a cap table. If you look in the cap table, you literally don't know a single person on there.
Yeah.
You start wondering, okay, who am I getting in bed with at the end of the day for these next 5, 8, 10 years or whatnot?
Yeah. And talking about, I mean, and this is your domain really is investing in traditional search funds, Stanford model search
100%,
funds. Yeah. It's been described, actually the first time probably I heard it described in this way was at the Investor Summit at ESA back in May, about the horse, the jockey, and the coach. And I think new investors, if they don't understand that was the original play here, the searchers aren't going to quite get the same level of coaching and the same level of support from some of those investors.
No, 100%. And I think that's sort of one of the big sells to, for me, one of the big things that I like is not just like, I think that sort of lost the train there for a second in the back. It's not just the returns, which it do have that level of protection, but it's also working directly with some of these young entrepreneurs who are driven and motivated and exciting individuals. And you sort of get to be there for the entire journey as opposed to being sort of a passive investor who, just waits for an email or a return to hit the account. And so I love seeing these individuals, and I love working with them throughout the entire sort of process. And they need that. I think that they thrive off of that level of, like you're saying, support that they get from these investors. I think that makes a really big difference to see the kind of returns as well that they're supposed to have, or that they're not supposed to have, trying to achieve, is based on how much support they're getting from some of these really brilliant individuals. The Will Thorndikes, Simon Webster's, Bill Eagan's, Jamie Turner's of the world. I mean, those are the kind of individuals who, if you were lucky enough to have them not only just on your cap table, but even on your board, I mean, it can make or break a lot of things.
Yeah.
It can move forward, in my opinion.
Yeah, no, I completely agree with that. And I think time will tell, but I think there's going to be a lot more search funds raised where some of those people aren't in the cap table and some of the investors don't quite get the model or aren't adopting it in the way that it was originally intended, with that kind of coach element to it.
Absolutely.
And you mentioned earlier IRRs, and I think that as well as some other forces, probably going to mean that the IRRs are going to not be quite as high going forward as they.
Oh, yeah. I mean, you just if you get a whole cap table of people who are just looking as this is just a component of their portfolio, and it doesn't have that much of value to them, and you sort of end up in that PE model space where it's like, look, we're looking for those blockbusters, and we'll have a couple walking zombies. We don't care about those companies, and we don't care about that kind of thing that happens. And I don't have my finger on the pulse anymore about the U.S. Since I've been in Europe now for a while, but in casual conversations, it's my understanding now that the acquisition rate in terms of searches has dropped down to close to 50% or thereabouts, and anecdotal because this is just coming from just a casual conversations. But that tells me that more and more people are just sort of doing the spray and pray technique kind of thing, where they're just basically trying to get the giant portfolio of searchers and whoever's able to acquire, and not vetting their searchers, in my opinion, as much as maybe we used to vet them before. That's a big thing for me, is trying to ascertain, is this person really a searcher, and should they really be in this area, or did they either see the numbers and they thought, oh, this is going to be an easy way for me to, get to make a handful of millions, or is this this is a great deal where I can take 2 years, get a 6-figure salary, and if it doesn't work, hey, look, I'm on to the next thing, and I made $200,000 or whatever it is for the last 2 years. And so it's really about trying to suss out those individuals that I think are in the space that shouldn't be here. Not that they're probably brilliant individuals, but I think a lot of people are now entering the search phase, or search space rather, who I don't think should be searched.
Yeah, no, I completely agree. And I think there's a lot of new searchers around the world, and there's a lot of new money in the space. So necessarily people who have got money that they need to deploy it, and searchers need to raise it. So actually probably far more searchers who wouldn't historically have actually been successful in raising a search fund probably are more likely to be successful now because there's so much money sloshing around in the space.
Well, yeah, I mean, you have that. Absolutely. I've already seen that for sure. I mean, there are individuals who have raised that I did not back, that I don't think they're going to be. So here's my key. Let me walk this back, because I don't want to sound like I'm saying there are all these individuals out there that shouldn't be doing it, because far be it from me to be the one to cast the first stone there. But I not only are I trying to suss out they're going to be a good searcher, because I think the actual point of acquisition is sort of a crapshoot. I think it's where an enormous amount of luck meets opportunity, meets preparation, right? And I think the luck is 70-80%. Because not only are you looking to acquire a business, you're looking to acquire a business with very specific model or very specific metrics, right? And these metrics are, you're looking for like the perfect company. Hey, I want a company with 70% margins, 2 employees, kicks off an enormous amount of cash, cash on that kind of thing, and they're going to sell it at a 3 multiple to me. You know what I
Yeah,
mean? Like,
yeah.
you know, we're all looking for that
Yes,
perfect
please,
business.
yeah.
Yeah, exactly. If anybody has
Two
it
of
out
them,
there,
please.
I will buy that right away.
Yeah.
So I think there's a lot. What I'm trying to assess from the individual is, are they really going to be a good CEO? Can they really run a company? Can they, in my opinion, one of the toughest things is people management. Can they run a team really well and manage people really solidly and communicate and have individuals follow them and lead it forward? So I'm trying to suss that out when I'm talking to searchers. And in many cases, I'm like, this person is not the CEO that I think I would follow and work with and that kind of stuff. And that's where I wonder, that's where I think a lot of the rubber meets the road. And the issue becomes, you know, somebody raises that maybe doesn't have that ability to be a CEO, raises it, goes out, buys a company, and then the problem becomes that they're not the right person for that job. And that's what I'm trying to avoid, at least from my investments, is to get involved in those kind of scenarios because they can get ugly.
Yeah. I've talked a number of times with people about the importance of being able to perhaps do a deal versus the importance of being able to run a company. So operational experience, or at least ability, versus ability to execute a transaction.
Yep.
And, you know, I think almost every time we conclude that it's far easier to buy in skills to help you execute a transaction than it is to buy in skills to help you run the company for the next 5 to 10 years.
Absolutely.
And so it's that operational skill set that you're really more focused on when you're looking at searches.
I mean, that's sort of the goal, is to try and suss that out. I mean, we'll see, we'll see how good you're only as good as, I guess, your last deal, or as they say in film, your last picture. But yeah, you're trying to suss that out and get a sense of who's going to be good in the operational structure. And it's probably playing on the same point. It's very easy to be good in the operational structure if the company's doing fine, everything's running, you don't have any issues. It's when the real problems come to the table, which, you see that time and time again with these businesses, that, and then that's where somebody either rises to the occasion or, struggles to get through the process. And so, I've got a series of metrics that I like people to try and meet. I know other funds and individuals who run literally personality tests and have them do, quantitative analysis and deal structures and all kinds of things that they try and suss out, who's going to make this kind of right person. So far, nobody has the secret sauce. At least I'm not seeing anybody's returns that will make me believe otherwise. So some individuals have likened picking searches to essentially like a dart throw and seeing what it's like. And I think there is an element of that. Part of what I really like about the search process, and part of what I believe makes the original model so effective and so valuable, is that 2-year period is a big learning curve for both the searcher and for the investor. And it allows me to get to know the searcher through that 2-year period, whatever time they acquire. I'm using the 2-year window, but they acquire it within a year, 6 months, 9 months, whatever it is, 18 months. It allows me to get to know that searcher on a much better level, and then to say, yes, I really know this guy is going to be able to run something, or to look at it and go, gosh, I changed my mind now. I think I'm going to pass on whatever the deal is. And so I think that's what makes that whole process so valuable, that 2-year initial part, as opposed to just somebody showing up with a business that they've got and saying like, oh, would you invest? I found this business, would you invest? It's like, I don't know who you are. Like, I don't know you on a ground level. So,
And that's why you prefer the traditional search fund route, right? And you mentioned earlier on, actually, the word protection, kind of limiting your risk. And I think that period as well, you get to 2 years in, actually you think, you know what, this isn't someone that I want to back to run a company. If the other investors are of a similar opinion, there is often a clause in there. And the reason I raise this is actually it just demonstrates how influential some of the people that you rub shoulders with and your father rubbed shoulders with are in the space. And it's known as the Bill Eagan clause, I believe. And can you explain just very loosely what that does?
Really loosely. Well, it's essentially if the searcher goes out and gets 50% or more of the capital to buy the deal, then those who are exiting have the right to be paid back their initial investment plus the 50% step up, in a nutshell. But it essentially protects investors making an investment and then the searcher going off and essentially buying the business without really utilizing any of the existing investors who invested in there, which had happened in the past, rarely, but it was a rare case where the searcher said, "We'll forget you all. I'm going to go do this," and then nobody got their money back. And it was like, no, it's not a loss just because we don't like your business. So so it is 50% or more of the capital that goes into it has to come from outside sources and not the existing investor base.
Yeah. Okay. No, it makes sense, and it does provide that protection to some extent. Look, there's always going to be residual risk in investing. But I think we had worked with a lot of self-funded searchers at the beginning of the time when we started working with searchers at Joel Edelman, and I was always quite keen on self-funded stuff, just because, it's immediate, isn't it? If someone brings you a deal, it's exciting. you see the company straight away, and you get to the analysis. Right, do we want to do the deal? Do we not want to do the deal? But actually, the more and more I kind of get embedded into the search world, the more I can see the benefits for both sides for traditional search funds. There's that support, and there's the time period to get to know someone. So you've got a bit for the searcher, you've got a bit for the investors, and I just think overall the model works, and I think that's probably why it has barely changed since the late 70s, early 80s when it first came about.
Yeah, and then you also don't have to negotiate terms, which is really nice. Like terms tend to be traditional, so when somebody when you get to the point of a deal, you're like, okay, we already know those. We've already sort of set up as opposed to somebody coming with this amount of equity. You're saying this, I want these to be the tranches, or They go from that kind of stuff, and then also I think all parties are aligned when in the traditional search fund. They all do well, and the searcher will, if he's able to hit those metrics, he's going to do the best, and it's going to be Bill has a quote, and God, I'm going to butcher it, and maybe we should cut this out of the whole thing, but essentially his thing is he's like, look, I know I'm going to be fine because my initial investment, I should be able to get some of that back. I should get all of that back. But I know that if the searcher does really well, I'm going to do really well. So I want to see the searcher do as absolutely good as possible, because as long as he does great, then I'm going to be following on his and riding his wind and doing just as well. So you're really rooting for the searcher as much as possible to hit it out of the park.
Yeah, and you're all aligned and working for the same thing. Yeah, exactly. That's great. So Bram, you mentioned very briefly that you, a million years ago, had run your own search. Can you tell us a bit about that?
Sure. I ran a search. This was so far back enough that there was probably maybe 10 of us in all Los Angeles doing a search. And now there's probably, I don't have a clue, but probably well over 100 or something like that, or at least certainly a lot more than there was way back when. And ran the search process, ran it over 2 years, didn't acquire, took a couple companies pretty far down the path, took one all the way down to the purchase agreement, ended up blowing up because the seller came back to the table with a whole new price at the very last, the 24th hour, and said, I want to renegotiate a whole bunch of terms, and then, it sort of blew up trust. And hindsight being 2020, it was a good thing. I think I would have hated the industry. It was in the drug rehabilitation space, and don't think I would have enjoyed running it. I think it would have been a pretty solid investment money-wise, but I think day in, day out for those years would have been pretty hard. That sort of was the process. I think, it at least gave me the stripes to be able to talk with a lot of searchers on a lot of different levels, because I would know it would be like in the trenches, so when they're actually working, but also prior to it, life after search if you don't acquire, which I now know is becoming relatively common, but also the process of seeing and understanding what good and bad businesses look like, and have seen both individuals I know and friends buy businesses that have done either very well or have gone off cliffs, and they've had to either rescue or sort of put down, unfortunately. So, but it's given me ability, I think, to be able to sit down and talk with people on a little bit of a different level, as opposed to just sort of a raw investor who's like, here's some money, I don't know what else I can give you.
And it's interesting. You've been there, right? And I've talked to people, searchers that we've had on, in the past about, how daunting it is, day one after closing the search fund and off you go, you're on your own and go and do it. And actually you've experienced that and you've been through it. So I think, it's a great experience to have had when you're coaching other searchers going forward.
Yeah,
So,
I love it. Yeah, it's good.
And so a fair amount of time has passed since then. You've had a lot of time to reflect since then. You've seen a lot of other searchers do it well.
Sure.
Obviously, not everyone manages to acquire. Is there anything that you would have done differently? Are there any gems that you can give people that you've learned since then, or is it just down to a matter of the seller tried to renegotiate the deal at the last minute and there's not a lot that could have been done?
No, I think that there's all kinds of things that I can think of that I'm sure, hindsight I would totally change. I don't know whether those would move the needle in terms of making an acquisition. I think the one thing that is most important that every searcher should know before even getting into the specifics of what I would do is that not acquiring certainly is not great. I mean, it sucks. It's certainly something that you really want to do, but it is not anywhere near as bad as acquiring a bad business. And it's very easy, very, very easy to get deal fever. I think every searcher goes through deal fever on a deal. Everybody gets, rose-colored glasses and says, I got to get this over the finish line. If you break down the way a deal actually works in reality, you're looking at about a 6-month window to get a deal done from and I'm talking about steady, fast, no problems, smooth deal from finding to signing of the deal, the purchase agreement. It's probably about a 6-month window minimum, in my opinion. Legal and things like that alone can take, an entire month to do. So if you break it down just on that, the most deals you can really look at over the entire course of a search are 4, right? Yeah. There's 6 months, per deal. So if you're really talking about 4 deals and you start, people get, month 9, month 10 and start sweating bullets because they're like, oh, wait, this is going by a lot faster than I wanted. I'm not getting the traction I thought I would get.
Yeah.
And now when you get that one on the line, it becomes everything. And so it's very easy to get these rose-colored glasses. And you have to, in film, they have a term called kill your children. And that's the whole point. You have to look at your deal that you love so much and not necessarily find reasons to kill it, but you need to look at it realistically and say, am I buying a great deal here that really is going to let me hit those metrics that I need to hit in order to be successful? Or am I buying this because if I don't take this one, there may not be another one?
Yeah.
I think that's one of the key things that people need to bear in mind is that it's much better to have walked away and not bought a business than to have bought yourself a bad job for the next 5 to 10 years.
Yeah, incredible advice, and I think it's a brave thing to have to do.
It's tough,
as you say, it's absolutely better to walk away than to buy the wrong business.
Because I've seen people buy bad businesses and it was not a good experience for them.
Yeah,
not a good experience for anybody, to be honest.
And you seem quite happy. You didn't buy a bad business. So,
It's you have to cut that part out. Okay, that may not make it on the air. Look, I was blessed in the ability to stay in the industry, to be able to still work with a lot of these individuals. I think there are niches that people can find themselves in, and it's not the end of the career. It's actually a really incredible path that if you don't, you spend this the way that I think you can. You're going to sit down at a table with, in an interview. What'd you do? Well, I was out assessing businesses. I worked with all these, great investors, and at the end of the day, when we sat down, we decided that this, X acquisition wasn't the correct acquisition. That's why I'm sort of shifting gears at this point and everything else. But you will have the community, I think, to be able to connect with and individuals, at least for the most part, to be able to have, hopefully for your rest of your career. So going back to specific advice, one, I would also point out, just I guess it ties into what I was just talking about. Every searcher, in my opinion, including myself, goes into this thinking it's easier than it is. It's incredibly hard to get a deal done in general, even if both parties want to do the deal. I have assisted and helped on deals with a good friend in New Zealand who was buying a company in Australia. It took them, I think it was 18 or 20 months to get the deal done, and both parties wanted to do the deal.
Yeah.
You know, and it just, you know, everything moves so slowly. And I mean, they were both running companies at the same time. So sometimes it's a matter of they can't talk for 60 days.
Yeah.
Because they've got so many things going on that they want to sit down, not 15-minute call, they want to sit down for 3 or 4 hours and discuss things. So, and I'm not saying that's the case, but you're going to get these CEOs who you're going to be like, God, I want to talk to them now. And they're going to call you up and be like, I can't talk for 3 weeks. I'm traveling to so-and-so, and then I'm here, and then I'm there. And the soonest I can even sit down with you is this point. So it's much more difficult to get the deal done, even if both parties want to do it. And so I think one of the keys that I try and tell our searchers is you got to hit the ground running. So anything you can do, prep work prior to being able to, you know, I wouldn't put in your mind, oh, there's a start date. Okay, when I close the fund, that's when I'm going to start searching. I mean, the idea is start searching. If you're really committed to it, start searching as soon as possible. Not with the necessary goal of saying, I want to have a deal before I've even closed. I mean, that'd be great if you did, but the idea of saying I have like a lot of my procedures in place, maybe I've got some interns lined up, maybe I've gone through and figured out, you know, what I need to do for brokers, you know, in the US, and I'm sure it probably applies to most markets. There's a lingo that you sort of have to learn. You have to get up on the speed to be able to discuss with them certain things, and they'll know, much like, you know, any professional, if you show up and you're not saying the right things, they're like, oh, this guy's an amateur kind of thing. You know, so it's that kind of process that you just have to get up to speed on. So I think that would be one element. The other one would be, and this was probably where my biggest mistake was identifying real sellers as opposed to sellers who are not really interested in selling their business. A friend of mine, Peter Schober, came on the site visit to the business I almost bought, and he told me early on, and going back to, you know, deal fever and everything else, he said, I don't think this guy's a real seller. And of course, I was like, I've got this deal, and this is, you know, I got to hang on to this one. It was printing money. There was a lot of great things about it that really sort of ticked all the boxes outside of the industry, which I think is, you know, got a little bit of a rough industry. And I didn't really identify that long enough. And then, in, you know, hindsight being 2020, I think he really wasn't. I think the idea of selling it was awesome at the beginning, and the closer it got to the actual thing, the more he was like, no, this isn't working. And then was able to present you know, almost an impossible offer. Like, okay, I'm going to raise I want this much more money. If you're really going to give it to me, I'll take it and run away with it. But you're probably going to say no, and then I'm still happy staying with the business.
I'm not selling.
Yeah, exactly. And so, you know, you have to identify those, and you have to do that fast and quick, and it's hard. And particularly, at least in the U.S., you also get sellers who want free valuations. You know, they're like, sure, tell me what my business is worth. Why not? You know, like I'll go down this path with you. I mean, and if you come back with some sort of, you know, 25 multiple, sure, I'll sell my business. But if you come back with even something reasonable, I'm just not interested. Now I can, and I've also seen on the same note, them utilize that to try and create bidding wars where they'll take the offer and then they'll go immediately over to PE and they'll say, this is what I'm getting. Can you beat this? Yeah. You know, and that's and they know better than that kind of stuff. So you know, there's a lot of pitfalls in terms of that area. Gosh, there's so many other little tidbits of advice I give in terms of hindsight being 2020. I think those are some of the real key ones. You know, you're also not competing with other searchers. I think that's really important to get out there. When we did our search, when all the searchers were in LA, we would meet once a month for a little happy hour and, you know, crying our beer about the deals that blew up and what we missed. And that really proved to be a really great element for all of us, I think, you know, and we even share deals if it was something that, you know, if we knew somebody had an X background and we didn't say, look, did you see this one that was being passed around, or did you talk to such and such? And that camaraderie really worked really well, and it created a nice support network, particularly because there is the element of being, if you don't have investors who are really engaged in your search, and this happens, I don't know how much it did in the U.S. now, but it certainly happened when we were sort of like, you finish raising and day one shows up, and then it's like, you know, it's like being the desert with the tumbleweeds, like nobody's around. There's no real there's no like nobody saying anything about like, oh, this is what you're doing or anything else, and you want to call your investors, but you don't want to call them and be like, so now what? Like I'm in front of my computer. What do I do? What do I do today? So you don't really have that kind of network, and that's where you get some of these other searchers who can come in and be like, yeah, I was there with you. I know what it's like. Day one is all sort of like, where do I go? Who do I call? You know, of course, everybody does the same thing, right? We mine the same databases, like quite literally. Every SaaS business is probably going to start putting up signs like no searcher allowed kind of thing, you know, because everybody calls every SaaS business and everybody sort of digs around in the same industries to start out with. And I will say this, the ones that I like the most and the ones that I see the most successful maybe not, certainly not across the board, but certainly in a way, are these weird little niche, boring businesses that you don't really think about.
Yeah.
And those are the ones that you see sort of the successes. So I would encourage people to look under those weird stones and those areas and start those from maybe early on. That whole SaaS thing you can even almost run with interns on the side. If you're one of those lucky people now who finds the SaaS business at a reasonable price that really is something else, congratulations. But you'll be one in the very few that would end up with that kind of thing, I think, in today's world.
Yeah, absolutely. Yeah, so it sounds like the community is a massive thing out in the US, but it definitely is here as well. And I think, the community, I think, is fantastic. Everyone's very helpful to one another. And I see people, searchers that I'm working with, they all know each other, because they're all providing that support to each other, and as you say, they're all talking about deals that have failed, and even, as you mentioned, sharing deals with each other. Because look, this isn't one for me, but perhaps it's one for you. I think there is an opportunity as well with searchers who go on to acquire something, who have got deal flow that they've identified. That actually, then they just think, well, I don't need it now. I've bought my thing. They're laser focused on their deal, and actually, all this stuff, all this sort of pipeline that they've been gradually moving along is almost dropped from time to time, and I think there's probably an opportunity there somewhere, but perhaps that's for another day.
Well, yeah, I've seen that deal flow be passed on just directly, not even for kickbacks or anything else, or maybe for finder's fees or whatever else, but being passed on to other searchers and just say, look, this is what I've been using or what I've been working on and that kind of stuff. And I think there's real benefit to that. I mean, these are your peers in theory and in practice. These are individuals long after whatever you do with your search. Whether you don't acquire, whether you acquire and have a good return, or whether you acquire and don't have a good return. These are individuals that in theory you'll be working with, or hopefully working with, for decades to come. So these are individuals you want to keep connected with, and people, and at least speaking from direct experience myself, I love the community I have and the individuals that I'm connected to. A lot of them are good friends, and it's all thanks to being in the same sort of trenches and working together and not looking at each other like we're competing. We all go back to the same wells. I mean, maybe not so much in England, but certainly in the US, we're all going back generally to the same wells. And I certainly don't want to see a searcher bring a deal and then another searcher bring the same deal, and they're competing on price right there.
One of them just steps away, right?
Exactly.
Bram, from a family involved in search from the very beginning, to running your own search, to director at the International Search Fund Centre, what's next for you?
Well, we still have a lot of vehicles we invest with. I mean, we're an LP in Bonzeo, which is John Simon's fund, and a couple vehicles personally with the family office. I think there's a discussion right now whether or not we're putting together a different style fund or a fund to invest in search. The struggle with funds is that the larger they get. This is sort of what my father's note touches on. The larger these funds get, the more difficult it is for them to allocate that money, because search by design is not designed to write these enormous 7-figure checks and deals constantly, right? That's the design of the model. So it's hard because you can't raise these massive funds to be able to just invest worldwide, but also the numbers don't work out if you don't raise a certain fund size, at least to support those who are doing who are running the fund. I think that's something that I'm exploring now, and that I'm talking with a lot of great individuals and in terms of what we may move forward internationally in a lot of different markets. And I'm excited. I want to stay in the search fund space, and I plan to stay in the search fund space extensively. But whether that is running a fund or advising or working with some of the other universities that are doing their own sort of new ventures in search, we'll see.
Okay, interesting, exciting. So you touched on there, Bram, the note that your father wrote, which I think is available on ESA's website, and it talks about, it's called a note to search fund investors. Mm-hmm. I think it's about really the portfolio effect and how best to achieve that when investing in search. Could you just give a very brief explanation of that theory?
I mean, it's best how to achieve it, but it's focused on the pitfalls. And the idea being is you're getting a lot of investors that see returns and they're just rushing into the space without really having any idea. I mean, I've spoken to potential new investors, and some of them will come to the table and they'll say, well, look, here's what I'm going to do. I'm going to come with this huge pot of money. I'm going to pick a whole bunch of searchers. I'm going to fund them all. They're going to go out, and then I'll pick which company I want and who can run it as a CEO. And I'm like, well, that's not even close to what a search fund is. You've basically just got employees that are now going to work for you.
An origination function.
Exactly.
Really,
Yeah, 100%. So you lack the entire purpose of a search. I mean, the other great thing for these new entrepreneurs and these searchers is the fact that they literally are the CEOs. They do make all the decisions. Of course, there are stopgaps in place in case they start making bad ones where we can remove them. But at the end of the day, one individual investor can't, say, I don't like what you're doing, you're out. Or, they can't be that kind of executive. They literally are the CEO. They literally are running the show. And just like a CEO has to respond to shareholders, it's the same thing with searchers and their investors, essentially. Is that, you have to, if you're making bad decisions, you're going to have to, pay the piper at that point. Otherwise, it's your ship to run. So going back to the note, the concept is pretty basic in that you have to have a certain number of investments, companies in your portfolio in order to see that sort of nice return effect that we've seen in the United States with the IRR. For the smaller investors, one of the issues becomes the ticket size has started to go up because the funds and larger individuals have started to say, I need to move more money. I need to write bigger ticket sizes, right? But the issue for the bigger funds is the fact that they can't necessarily always write these, big, large 7-figure checks because the deals aren't designed that way. So it's sort of this push and pull between the two areas you end up with. And I think that there has been a little bit of a negative trend toward having to get bigger and bigger and bigger deals. And I understand from a searcher position why they would want a bigger deal. But I think they're doing it at the detriment of not looking at some of the smaller deals because they're saying, well, my tentpole investor said they're only going to write a 7-figure check. And they're not even, if I come to them and say, I don't need that much, they're not interested in doing that. They want to write $2-3 million into the deal. And so I have to go to these ones. And so they're not looking at some of the smaller deals, which could be just as successful. If not, I mean, at the end of the day, sure, if you buy a bigger company and it's a big success, you're going to get more money. But if it's not, and you buy a little one, that's a big success. It's all about where the success lies. It's about, can you get this to that next level? Can you grow it at that kind of pace you need to grow it at, regardless of the size of the business? And I think it's really, again, it comes back down to picking and selecting the right good business as opposed to saying, okay, it's got to be this size and that kind of stuff.
Yeah, great. Yeah, and I suppose that one of the elements in that note is talks about kind of the optimum number of companies that you want to get in your portfolio, but of course to get to that number of companies with say a follow-on rate from your search capital of about a third. If you want to get to say 15 portfolio companies, you probably need to have backed 45 searchers.
Yeah.
Which actually, if you think about the search capital and then the follow on for 15, there's quite a chunk of capital to deploy. And obviously you don't need to deploy it in 1 year, but still it's for smaller investors, that's quite difficult to achieve.
Exactly.
And for larger investors, the governance piece becomes a bit of a question there as well, because actually, you're a fund manager, you're probably going to want a board seat if you're writing a $2-3 million euro check. But actually you've now got 15 entities and does a $2 million check warrant you taking a board position in each of those entities? There is a challenge there, as you say. I think it was designed for the smaller end of the scale in terms of investment, and it's kind of at the moment in the middle ground, and I think it's going to settle somewhere, and I'm not quite sure where that's going to be at the moment.
Yeah, and I don't know whether, I think, was it designed for that sort of lower end or whatever you want to call it, that SME area? I don't know whether it was designed. The problem is that it's not designed to be, it's not scalable, right? So you can't have these, bigger and bigger and bigger things, and that is by design. And I do think the point was that nobody was fishing in that pond of these, million and a half EBITDA companies way back when, right? So there were a lot of these really good, awesome companies that they were essentially lifestyle businesses. Sellers that I personally had spoken to, you'd say, well, why am I growing this business? I go, what am I going to do? Come in at 8 a.m. and leave at 9 o'clock at night? It's like, I got 2 boats and I got 3 houses. Why am I bothering to work my butt off for this? I'm going to play golf half the day and just come in and make sure that the ship's not sinking. That's the perfect business, right? And the size didn't matter, because that one was the one you could scale. You could grow this thing really, really awesome. You could take it over. That young entrepreneur could get in there. And I think a little bit of that has changed now. So I don't know where it's going to settle, and I don't know how it's going to settle. I think there's a lot of focus now on developing markets. I know that some of the funds have taken a position of saying, okay, these developing areas are going to be really exciting. I share some of that belief, not all of it. Is the American market, or not even American, any market saturated? I don't think so. But are they mature? I don't know if I'd say they're mature. I think there's always going to be great SMEs in a market like America that's so big. But am I going to invest a little bit more, or at least focus a little bit more outside of the U.S.? Maybe, or maybe the focus will be to do a little bit in the U.S., but a lot more in, whether that be somewhere like Europe, which is still sort of developing a little bit, or somewhere like India, which is completely a brand new market, but is at some point that will tip, and that's a place where there's an enormous amount of necessity for professionalization, in particular in the SMEs in the service fields that will need to move to that next level and have not. And so, there's real opportunity there.
Great, exciting stuff. So we've been through right from the beginning, and we're going to work our way right to the pinnacle of your career to date, Bram, which is you were in 2024 a judge at the ETA Awards. So I know you attended our inaugural event in 2023, and obviously we invited you to become a judge, and you kindly accepted and did that for us. How did you find that process, and how was the event?
Oh, it was a lot of fun. I think it's a great event. It was a lot of fun to do, and I've met a lot of wonderful people throughout the whole process. And I encourage people to come out and do it. I just need you to do it in a different month so it's not freezing cold. But yeah, no, it was a wonderful event. I really appreciate the opportunity to come in and be a judge on it and go through the process.
Yeah, brilliant. Well, we really appreciate you helping us out with that, Bram. and I think the conversation we've just had confirms to everyone that you certainly have the experience and knowledge of the industry to have been a fantastic judge for us. So the final question, which is one we ask to everyone that comes on the podcast, is who, and this one may be obvious actually to me at least, although perhaps I'm wrong, but who has taught you the most on your journey and in your career?
Well, yeah, that has to be my father, clearly. I wouldn't be where I am if it certainly wasn't for him. I've been blessed enough to be able to come into the industry. There's definitely still a boys club to it, to a degree, having to know people to be able to get in, but certainly in the earlier parts of it, it was definitely an inner circle thing to be able to even know some of the individuals that are in it. And I've been blessed to meet some of the smartest individuals I've ever known, when Will Thorndike, who I think is a literal genius, or Bill Eagan, and same kind of thing, or Frank Kinney, or I go through a whole bunch of names I probably shouldn't because I'll miss somebody out on there. Yeah. Like Mark Eagan, that's who I should have thrown in there too, right, Mark. So yeah, I think it would be my father teaching me the most about everything else, and being, lucky to be in on Search. He's been, he's taught entrepreneurship, and, he was he founded the International Search Fund Center and the conference. So that was his brainchild. So that would be the case.
Yeah, brilliant. No, and there are no surprises there. Yeah. But yeah. Well, Bram, thank you so much for joining us. There's been some really, really good gems of advice there, and hopefully we'll have you on again in the future to hear about what it is that you do get up to.
Excellent. Yeah, it was a real pleasure. Thank you.
Don't forget to follow us on LinkedIn at The Found and Funded Podcast, and on Instagram at Found and Funded Pod, and comment on who you'd like to see us sit down with next. If you have any questions about what we've discussed today, drop me a message and let's have a chat.